Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, September the 25th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. We do not know what the market's going to do. We can only guess what side is going to take control and have a plan in place in order to execute whatever the market shows us at the open of the RTH. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. We'll be doing these pre-market sessions live, open to the public all week. And if you want to come in for our regular trading and analysis during the RTH session, send me an email at quantumleapfutures@gmail.com or give me a call, contact me on Skype. There's over 650 days of these pre-market videos on YouTube. You can certainly go there. And of course, if you're here, you're already following me on Twitter at Crazy2. Let's just get the disclaimer out of the way. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at Friday's trading, there's a couple things I want to point out, but we'll get to that on the macro view. Basically, Friday held above the Thursday overnight low of 92. We opened auction, just inside of the Thursday RTH session, dipped down to the 24.94.75, and then the buyers stepped in. And basically, we were looking for a rotational sideways day to create a base for another move up. And basically, we got within one tick of the overnight high and the naked VPOC, but failed to take it out. So where we have a normal day, a neutral day, and we also had a day last week where we failed to take out the overnight high and overnight low. So we really had three low probability sessions during the course of the RTH last week. In fact, we opened the week at 24.99 in the Globex, and we closed the week at the end of the RTH session at 24.99.75. So we really didn't, 24.99 and a quarter. We really didn't do anything. We had a doji week last week. So let's take a look at the big picture. Well, we'll take a look at the news first so that we get that out of the way. So in terms of news this morning, we just had Chicago Fed activity. It was a little bit of a miss. Dudley is speaking right now. We've got the big one we've got to pay attention to is Draghi's going to be speaking in about 10 minutes. So he's going to be speaking coming into the RTH session. So we could see some volatility depending on what goes on with his speech. 10:30 we've got Dallas Fed, and 11:30 we've got 3-month and 6-month Treasury bill auction, and then we've got Chicago Fed President Evans speaking at 12:40, and that's it for the news today. This week on Tuesday. Tuesday at 8:55, we've got Redbook, we've got HPI Composite, we've got Mester speaking, current accounts. 10 o'clock, we've got CV Consumer Confidence, new home sales, Richmond Manufacturing. This week is pretty much a solid news week. So hopefully where we found some balance, we can break out of this balance and either go up and repair that week high, or I think there's a week low there too. So you can see there's quite a bit of news. But what I want to get to is the bigger picture. and a couple things I want to talk about. We've got this microcomposite now that is from the gap up day that starts on the 12th and runs until Friday of last week. And we had a pretty distinct double distribution between the balance that we had for the 4 days in the microcomposite VPOC down here at 2493.75, and then the 4 days that we tried and we put in the week high at 2507 and a quarter. We tried to hold value up at the 2504.75 and failed to hold that value. And now we're stuck in between the two value areas of the double distribution. You can see that the 4-day value area low rate here is 24.99 and a quarter, and the 4-day value area high is at 24.95 and a quarter. And Friday, we basically traded inside of that. We talk about this all the time about having this move that we had on the Wednesday where we had the North Korean news, and we went down and hit that 24.94, one tick in front of the microcomposite VPOC at 24.93.75, and then immediately came right back, leaving this unauctioned territory. And what do we do when we see that? We look for getting stuck in the wicks. And Thursday and Friday, we went down and repaired all this, this unauctioned territory and got stuck in the wick. And basically creating a new little distribution zone at 97 and a quarter and below the 2500, but right inside, in between the two value areas. So key levels we want to pay attention to today are 95 and a quarter. You can actually look at the low from Friday's RTH session, which was the 24.94.75. That will be a trade level for me. And then the 24.99 and a quarter for getting back inside of the value up here. You can use the 2500. The problem I always warn traders is when we get into a centennial number, you gotta give it a slush zone of about 2 points on either side of that, because you can just get chopped up if you try to have a tight stop. The overall value is between the 91 and the 2502.50. So anything above the 2502.50, I'm really looking for a move towards the 2504.75, back up to where they tried to hold value before coming down on Thursday and Friday. And if we can't hold above the 24.94, a trip back to the overall most accepted price within this larger microcomposite down here at 24.93.75. My key line in the sand is going to be 91. Anything below 91, I think we come down and finish closing this gap down here and coming down towards the 87 and 85.50. So it's just going to take a step back and take a look at the macro. I always use a monthly and work my way down. I use my paper money. It does have live data. I've got my execution platform on another system for my options, but I love the drawing tools on Thinkorswim, so I use them to look at the macro view. Now I've got basically we're in an upward channel. You can see that starting from this month right here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months where basically we haven't broken the lows of the prior month by any significant amount. And we're coming up and we're above the center line of the upward sloping pitchfork. And resistance doesn't come in, until we get into the 2600s on the bigger picture. But what I want to pay attention to is not the fact that we've got good slope, good separation, and prices paralleling the 9 EMA. All my EMAs, for those that are visiting, I use a 9 EMA and a 20 SMA on all my charts. You can see that the trend is very much intact. As we move down to the weekly, you can see that on the weekly, we've got this upward channel, and the resistance on the upper channel isn't going to come in until the 2565 area right here. So that's going to be solid resistance on the way up. And then the resistance on the way down is sitting right on the 20 SMA right now at the 2453.46. So anywhere down here is looking to be a pretty darn good buy for a continuation up into the upper resistance, the upper channel line, and a possible breakout on the larger time frame. And you can see that the slope and separation of the 9 and the 20 price is paralleling it nicely. We do have a doji week from last week, so we are seeing some resistance. So we could come down, and a trip down to the lower channel line in the 20 SMA is down at the 2450, and I think that's going to create an opportunity of buying somewhere between there and the 2412 area is going to be a really good buy for another continuation long. As we move down to the daily, you can see that we're creating this this flag formation, and we've got to watch for breakouts today above the 2504.75 and below the 91. And those are those levels. See how those levels overlap between the different methodologies, between the volume profile and the auction, and basic geometrics of the market. You can see we are sitting right now on the 9 EMA right now. A break of the 9 EMA, I'd be looking to come down and test the lower channel line of the flag down here in the 2491 area. Again, very much market has memory here. As we move down to the intraday, you can see that we do have a downward trend on the 4-hour. We're below the 9 and the 20. We've got slope and separation to the downside. We're coming down into this level right here, which is going to be our support level at that 91. But the intraday 4-hour is down. On the 1-hour, same thing. We tried to get back above the 9 and 20 and failed, and we're back below it. On the 30-minute, you can see we are moving down. We're starting to get a possible continuation pattern. We just took out a naked cross down here. We do have a naked cross right here at 24.9975. Write that down in your journal. If we get back above the 9 and the 20, that's going to be your target. And of course, that's that area of LVN at the 24.99, and of course basically the open and close of last week. Going to the 15-minute, you can see that we're below the 9 and the 20 again, and again we left a naked cross up here at 25.01 1/4. There is a weak high, so I'm still thinking that we have a possibility of breaking new highs. I did want to point two things out in the Globex. Beautiful FUBAR Mr. Sneaky tech gap on the 15-minute as well as on the 5-minute. That was the trade of the Globex last night. For those that don't know this setup, come into the room or go on my YouTube channel, and there's a video dedicated to this particular setup. But there's the FUBAR, there's the Mr. Sneaky, creates the technical gap, gives you a beautiful entry, and you could have basically traveled the whole range of the Globex off of that one trade. So if there's one trade setup or one idea that you take away from Quantum Leap, it's the FUBAR Mr. Sneaky tech gap trade setup. And it's got a funny little name, but it's a very serious setup that you're going to find that works through multiple indices and basically you can trade this on pretty much anything. You just have to find the right time frame for that particular setup. So let's take a look at the overnight session. The overnight session, basically we tried to get back above the 2504. Remember, the 2504 is our Fed number, our FOMC, scene of the crime. We returned back to it, and then the sellers stepped in and rotated us down. We're basically about I'd say 50 to 60% net short. We've got a B-shaped profile right here. We're accepting value in around the VPOC from Friday at the 24.97. Our overnight VPOC is 24.97.50, and we've got a week low here at the 24.95. So in terms of my hypotheses for the day, let's start moving our numbers over. So our overnight high is up at 25.04.50, right at that range high from the other day. Our overnight low is likely to get taken out before the Globex or before the RTH starts. Our VPOC could shift, but right now I'm going to put it at 97.50. It might shift down to 96.25, 96.75, but right now it is 97.50. And then we've got this LVN here at the 24.99.25. I'm going to be using that because it's also the value area low from the micro composite. So that's going to be a key over underline for me. And there's another LVN at 25.01.50, which is just above, one tick above the naked VPOC that didn't get taken out. And that's about all the information that I'm going to get. We've got the micro off of the Globex. We've got the micro composite, the bigger time frame micro composite VPOC down at that 93.75. So in terms of my hypothesis, I think that we're going to have a rotational day between the 93, 91 area up into the 25.04 area. Our 20-period daily ATR, that's the full session average true range, is running at 13.33. So at the low overnight of 24.95 plus the 13.33, our upside daily ATR target is 25.08.25. And off of the high overnight of 25.04.50 minus the 13.33, our downside daily ATR is down at 24.91. I don't make this stuff up. Now let's see how that 91 keeps coming into to play, and that is going to be our daily downside ATR and our key line in the sand. All right, so what do we do with that information? Just I've got to put 87, that's being moved up, and that becomes a trade area. I've got the 91 covered, and we've got the 97 as a target, that's our VPOC. Okay, let's do the hypotheses. So right now, as it stands, we are probably going to put in a new Globex low here. And there's nothing I can do with the time that we're doing here. We've got a very weak low right now at the 24.95. My main hypothesis is either an open auction just inside a range or an open auction just outside a range. I'm looking for initiative sellers stepping in and pushing us down. Somewhere between the 93 and the 90 area, I'm looking for a basing pattern and then a rotation up into the 97, chop around in the 97 area, push through, try to get over into the 2500s, pop up into the 2500s, and somewhere between the 25.01 and the 25.05 area, finding those sellers again and coming down and closing inside of this low volume area between the two value areas and probably closing somewhere around 97 again. So that is Hypo 1. Hypo 2, which has got actually pretty equal weight to it, is responsive buying up into the 97, 98 area, chop around there, try to break out to the upside, fail to come up and fill the gap or the naked VPOC, or take out the overnight high, and then rotate, roll over, come back down, fight the 97 and 95, and then push through down to the 91, find our base, and come up and close around 97. My whole Hypo 1 and Hypo 2 centers around a rotational day and more repair between the 91 and the 2504 area. Hypo 3 is, since we are seeing some weakness, I'd be looking for responsive buyers up into the 97, fail to get back into the 2500s, find the sellers, have the sellers rotate us down into the 91 area, chop around in the 91 and fail, and come down into this 85 area and close the gap, and close somewhere down in this area down here. Maybe even down to the 83, 84 area, but basically the main target for Hypo 3 is going to be that 87 to 85 area. Hypo 4 is a open auction, a false, open auction in range, a false breakout, come down in the 93 area, find responsive buyers, rotate us up into the 2501, and then push through and come up into the 2505 and take out the weak all-time high. Remember, we still have that 4-hour inverted head and shoulders, which has not been violated. We have to break below 72 for that inverted head and shoulder pattern that we put in the room. I think 2 weeks ago we were targeting that 25, 10, 50 as the primary target. Let me just bring that up for just 1 minute so I can show people that are not familiar with what I'm talking about. So this was an inverted head and shoulder that I put in the room, I don't know, 2 weeks ago. And there's the left shoulder, there's the head, there's the right shoulder. We have a primary target up here at the 25, 10, 74. We've already hit the 38.2 target, and we missed the 25, 10, 75 by 3.5 points, but that is still a very valid pattern until we get we break a little bit lower. Taking a quick look at gold. I know I'm going over a lot, but there's a lot going on right now. You can see that gold is finding some balance down here. In the last 3 days, after coming down to $47, we're finding balance right here around 97. Our composite VPOC going all the way back to October 2008, this is down here at 1275.50. So if we don't hold this CHVN right here at 91, 1291, we could see another liquidation break on gold down to the 75. As long as we can hold this 91, I'm looking for a basing pattern and a rotation back up into the 1300s and the primary target up here at the 1312. So basically we've got, I'd be watching the open in the 1301 area for a breakout into the 07, which would be some resistance and a move up into the 12. If we can hold the 91. If we don't hold the 91, look for them to come down. You can see that this value that we're back inside of down here, the value area low is down 1286.50 and just below a key CLVN. If we get below that, I'm thinking we get a continuation down to the composite VPOC and come back to the longer time frame balance. All the way back from 2008, and then we can just we can determine if we get the next leg up or they just balance out here and fail. I still think gold's gonna go up into the 1550s, in the next 12 to 18 months. So I'm still bullish on gold. I'm just looking for a spot, to get long. I got long between that 38 and 43 harmonic, and I got paid on it, but it just didn't get the continuation. And now we're seeing some more weakness coming in this week so far. So we'll just have to watch that 91. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.